Hey, what's up, everybody? Good morning. I just wanted to put out a video to discuss some of the upgrades that we've made to the movement monitor, specifically detection of expansion, right? Potential for expansion versus where maybe there are situations where it's not as likely, both bearish and bullish. Secondly, I wanted to run a back test so people can kind of get an idea of what this most recent move late last night looked like. This could happen obviously in the day, sometimes it happens at night. It's kind of irrelevant, it's just a matter of whether or not you're awake for the move. You can also obviously set up positions in advance, try to take advantage of that sort of information. But with all that being said, I just wanted to run through some of what is new to the movement monitor, right? It's already been pretty awesome in that it turns orange when we have a high probability of a move to the upside in any given time frame. It's pretty awesome that it turns blue when we have a nice probability of a break to the downside in any given time frame. What it does is it not only measures movement, but it also measures deviations in trend. It has a very, very sensitive trend analysis that alerts us very early as to what's going on. It also incorporates volume, which is very rare to incorporate volume in and of itself, as well as money flow. So we found that it's been very accurate with that alone. And because of that, I wanted to build an alert that lets people know the first time that it turns blue and the first time that it turns orange, right? After a window of time where it has not been blue or it has not been orange, right? So that sort of thing in and of itself, just so everyone is on the same page, is a new alert. It would just kind of starting, at the top of this, give you an idea of what it would do, right? It would notify you somewhere in the range of here. It would again notify you here. Again, it would draw your attention here. It would draw your attention here. It would not draw your attention here because no orange showed up. And then again for blue, it would draw your attention here, right? So that is what it does now on blue as well as orange. In the past 12 hours or so, we haven't had any orange movement monitor show up on the 5-minute, right? We've been in an overall extreme bearish state. So with that being said, nothing has shown up in that regard. I wanted to make clear what the very small points that have changed on the movement monitor as far as alerts go actually were. And so those are pretty exciting in and of themselves. Before it was pinging for loose bullish, loose bearish. It was pinging kind of all over the place. And so I didn't personally use the alerts. And I know most of our MSA members probably don't use the alerts still. So now I'm kind of in an effort to help people with their time efficiency, sharing more information so they can have a better understanding of what alerts are, what they're for, why they're beneficial, why we want to use them, because we want to make good money trading. We want to find statistical probability in trading crypto or whatever it is a person feels that they want to trade. Could be Forex, could be stocks, etc. A lot of us, kind of got started with this in crypto or choose crypto because of its volatility. And so with that in mind, that is a huge change, and time efficiency is a big part of what I want to bring to people. So with that being said, you can kind of see the data, working as it is right now, right? I'm going to point out what a couple of these additional features are. This is real time, and then I'm going to do some back testing. Again, very, very small, sensitive time frame. To a lot of people, it doesn't mean a whole lot because it is the 5-minute. However, I think that this information is going to be useful, and so I want to share a lot of this with you guys. So again, real-time price action is happening here. You can see this is the real bar, 1st of May. Can't believe it's May already. 5-minute time frame. So we've got pretty significant down pressure that we've been in, that we've had. We're not at present in a situation that we haven't already been in before, right? We actually already encountered this support, this blue line, this white line. These are both pressure lines, which are another DIIO algorithm. You can see we encountered white line here. And I always like to draw people's attention to the fact that these lines are actually not technically lines. I actually encourage people to view them as zones, right? So on average, when you look at this, you should look at it as a zone. And then I want to also point out that sometimes real price action, which is imperfect and inefficient, and it's not, it's not designed to be perfect, will deviate from these zones for a period of time. Sometimes it deviates completely and we keep going down. We've seen that happen before many times. Other times we see that in this case, this 5-minute candle deviated significantly, came down well below the white line, well below the blue line in a period of heavy bearish momentum. However, we also see that in the big picture, slightly bigger picture, right? Here, here, back to here, we'll see how it reacts today. But in these, slightly larger windows of time, the blue and the white line are doing their job. And so if we really kind of look at the benefits of something like a pressure line and how it might work for somebody in a bigger picture, if they had the thesis of this is where I expect the bounce to happen, just want to point out that this, even though it looks magnified on this chart, actually only deviated from the line about 0.62%. So that's why I always say lower leverage traders stand to win much more often, right? Because if a person was willing to be off as much as 1%, 1 real percent, just in spot trading alone, they could have on a 1x in derivatives, essentially the equivalent of spot trading, they could have been willing to risk 1% to make 6%. And so they could actually magnify that leverage by 5 and still be within that 5%, threshold, right? I'm willing to lose 5% on this trade so that I can make this figure up here. I want to make sure everybody understands this. Let me actually change settings here. Okay, so I'm willing to lose 1 times 5 because of a 5x leverage. So I'm willing to lose 5%, again, just based on the math, to make 6 times 5, right? So I'm willing to lose 5% to make 30%. That's not the greatest risk-reward ratio that we have in our model, coming in at 6.33, but it's not terrible, right? And so for somebody who wants to do a 4x leverage trade, 5x leverage trade, 3x leverage trade, it's an overall conservative trade that with these pressure lines and this data, they could have set overnight. In fact, we talked about a trade similar to this literally a week ago in the DIIO mastermind. We were in voice chat. We literally talked about this exact trade, what it would look like to do a 10x, 20x, 5x, etc. Right? So this is where it came in for those of you guys who were on that chat, right? We wanted to kind of see. It came in at 0.63% deviated from the line. So on a 10x, a person could have been willing to lose, they had to be willing to lose. Again, this is just where it ended up. Hindsight is 2020. But they had to be willing to lose almost 7% of their capital. And then the goal would be that they hope for a bounce or a retrace to, somewhere up here to make the asymmetry worth it, right? To make it 10, to make it 13, to make it DIIO quality asymmetry. That's kind of what they'd be looking for. And right now, they're a far cry from it, right? It would have bounced as high as 2%. They would have only gotten as high as 3.63% asymmetry. I will say their trade would be safe. They would literally be able to, close this gap, essentially push their stop loss into profit and be in a safe trade. However, whether or not this bounces the way that, it could or may not is anybody's guess, right? We'll find out. It didn't have the immediate effect of a bounce. We also talked about that, right? When it comes to momentum, a lot of times when you see a huge move and it happens quickly and abruptly in a small candle, from 60,000 to 57,000, a lot of times you do see a nice bounce. And if it happens slowly, more slowly over time, a lot of times, that momentum isn't strong enough to create the bounce. A lot of it, I suppose, can come from sentiment and that sort of thing too. But I wanted to touch on this because this is related to pressure lines, which is an older algo that we've been using for a long time. I think it's, for any given member, one of the favorites. So I'm going to keep this pointer here. I want to do a little bit of back testing really quickly just to show people what it looked like to use the new algos, right? So we'll see, where this trend scanner kind of starts to populate. If you decided to make this a part of your alert sequence, right, you have the ability to do that. Still looking for bugs. I want to make sure that we take care of any bugs that there are, but you have the ability to identify as a part of the alert a clean trend, right? You can go back 5 bars, 10 bars, 15 bars, 20 bars, and 30 bars, depending on how clean of a trend you want. In this case, the rectangle is red because it's a bearish trend that it's spotted, and it's on sensitive mode. So it's basically saying the last 5 bars have been all blue movement monitor, and the bars have had no yellow or orange among them, right? So they've all been relatively bearish. It still works when there's a green bar, but the rectangle will disappear if there are yellow or orange bars in the case of seeking a red, bearish, clean trend. And then the opposite is true when looking for a bullish trend, right? It is going to scan for blue or cyan bars like these two. If it finds them, it will not display a green triangle, right? Triangle with a green border. So unlike this one, which has a red border, when it's bullish, it'll show up as a green border. If I go back far enough, it may actually have one. It's been a minute. There it is, way back here. Right, so you can see it didn't last too long. It probably followed it up here. It's just showing where the green rectangle ended, right? So it probably started maybe, one candle in, and or maybe it started 1 or 2 candles in, might have had a break there because of that green bar, so maybe it didn't even start, but it kind of shows you where the last green one was. And then, of course, the last red one is our current candle. So that is what the trend scanner aspect of the Movement Monitor 2.0 actually does. It just kind of identifies periods of time where we overall have minimal volatility from the opposing pressure, right? So again, no yellow or orange, no Confluence showed up that was 75% or greater bullish Confluence in the past 5 bars. That's why it's there. Again, you can make it more or you can make it less sensitive. If you're looking for entry, a lot of times making it very sensitive is a good way to go, if you use it at all. Some people purely want to use the other parts of the algo, which are ideally, if we have a situation where you're in a red volatility cloud, you have blue breakout bars, again, if you have a clean trend, even better, which is where this comes in. And then, and as you can see, you have no yellow, you have no orange in here over a 5-bar period. So that rectangle will show up once the movement monitor stays consistently blue. And then the next part of our algo comes in, which has to do with the detection of expansion, right? So these little red dots, in the case of a bearish potential move, begin to show up when it detects potential for expansion. And so they started to show up here. I only allow them to show up when the movement monitor is either blue or red, or excuse me, blue or orange, right? So it has to have, the movement monitor itself has to have that heavier confluence in whatever direction. And if it loses it, like it did here, right, we can kind of see that there's a period of time where if we look at this little tiny break in the movement monitor where it goes from blue, it's not quite sure, it goes back to red, then it goes back to blue. There's this period of time where I did not allow a red dot to show up. It probably could have been there, but because I have movement monitors as an added layer of Confluence, I do not have the red dots show up unless we have that extra Confluence, right? Because I want to increase the probability of their success. So I want less of them, but I want them to be in higher quality situations. So I'm going to go back and kind of just show what it looks like to a user as we run through it, right? We're a good distance from a pressure line, but I want to point out that with regard to a lot of the longer term ribbons, we are operating below them, which usually indicates shorts as being the move that we're probably going to be seeking. We had a pretty clear breach of this pressure line right here. So we're operating on the bottom side, which means generally that if conditions remain conducive to shorts, we're probably looking to ask ourselves, what is the probability of expansion to the downside, right? So now we know we're looking for shorts, we're looking for expansion. We like to operate under these situations where we have red volatility clouds, right? That's where we have the highest probability for expansion. If we see red, green, red, very striped, then we can't take them too seriously, but any one of these could turn into a larger scale move. And so that's where we have to kind of look at these expansion detection dots. That's where we look at the blue movement monitors. Maybe we play a couple of them because we do believe shorts is the bias, but we have to be prepared to potentially have it be short term, right? Again, it depends on what's happening with multiple other time frames beyond the 5 minute. But we would all agree that all major moves will have to kind of start with the 5 minute. We just want to avoid as many fake outs as possible. So we have to monitor the 12 minute, we have to monitor the 24, things of that nature. If you're looking to take advantage of maybe higher leverage, shorter term moves, right? So this is one of those moves. That's why I want to share it, because I think it does a good job of displaying the sensitivity and where a user would be notified, even with alerts set. So we'll kind of walk through that, and that's really the purpose of this video. I want to give people an idea of what's going on there, right? So we're going to do that. I'm going to get rid of that for a minute, and let's go into the replay mode, right? So what I'm going to do is I'm going to start it right here. You can kind of see what's going on the screen, gives you an idea of where we're at, and we're just a few bars away from the move. But this is kind of neat because it allows us to replay it in full. And let's go ahead and see if we can actually use breakout analysis, which is really cool as well. This allows us to go really deep into probabilities, right? And we can kind of see like, what did the 5 minute breakout detector and Confluence monitor display, during this time, and what did the label say, right? So as it is, you can see we are at 95% short Confluence and only 12% long Confluence. Now the 5 minute can be finicky. In full transparency, it can be a bit finicky. So a person with this data would probably look at a few things, right? I just want to point out a few things. I think a lot of us have learned we like to look at what's going on with the trend sniper. I think the most authoritative part of this particular KPI is the macro trend. If we get a signal, usually that's a good thing. So when this macro trend signal starts to say pending, right, not previous candle, but specifically pending bearish, then that's usually where the move becomes, of a higher probability. Everything starts with this, right? So when we're in the transition zone to bearish, it generally is where we have a higher probability of going full bearish, right? So it's giving us a little bit of a heads up that this macro trend could change anytime. It also lets us know that we're currently in the bull zone, again, relative to the 5 minute time frame. So you have to keep things in context when you play this game. But overall, we also know that the trend Confluence has been bearish and the energy is diverging, which is bearish in itself. We can see we're in a transition zone, so the trend might be changing. So, okay, we know that. And then we could see trend and power, you know, kind of same thing, all displaying bearish. Volume, momentum, displaying bearish. A lot of the KPIs that we keep track of, all displaying bearish already. Again, I like to look for things that say pending bearish, because when it says previous candle bearish, it could imply that it's losing momentum, right? So we see zones, which anybody who's familiar with the Confluence monitor knows, zones are more important than more sensitive metrics, right? And so it's relevant that we're in the bullish zone, but Confluence, again, the third and final most authoritative part of this particular metric, says we are currently operating in the bear zone. So even though we're kind of flat, you know, probably because price action was overall flat, you know, for the past few bars, it's letting us know that, hey, just keep in mind we are in the bear zone. Zone takes much longer to move than the other items, right? So zone in this case takes longer to move than sensitive, and then zone definitely is more important than Confluence, right? It has just more longevity. I won't say it's more important, but it has more longevity than otherwise, you know, short-term volatility or signal. Energy zone, again, is a little more flippant than actual zone here in the Confluence monitor. And then this is kind of nice because it gives you an idea of what's going on, both short-term as well as real-time price action. Real-time price action is exactly like it says. It's literally telling you what the real-time price action is doing. Short-term is probably giving you a slightly less emotional point of view. And then if you look at these, you can kind of see a much larger scale trend. Again, in this case, relative to the 5-minute. So it's kind of saying long-term, this trend has actually been bearish zone. Long-term EMA, technically we're above the long-term, right? Now think like hundreds of bars back, right? So 1,000 minutes ago, right? It's kind of looking at that. But again, relative to the 5-minute. And then it's this here, says the long-term EMA, again, think long-term, is strong bearish right now. So it's actually starting to flip a bit, but it's been in the bullish zone, right? So for what that's worth, these again move much more, I would say, much more in a sensitive manner for, you know, price action to I would say for the price action that you're currently looking at working with. They're going to be more sensitive. And then trigger, I will say that occasionally these will give good data points, but you probably want to evaluate a lot of other things before you count on a trigger, because a trigger could just mean a resetting of shorts, right? If it says consider a long in a downtrend, it's almost like what's likely to happen is you might see a green candle or some up pressure that gives you an opportunity to reset your position, right? So instead of longing in a downtrend, just think to yourself, it's probably a better opportunity to take advantage of some of that up pressure that's overall likely to be short term based on all these other things, and reset my shorts, right? So just keep in mind that sometimes trigger, because it's so sensitive, is something that should be looked at as resetting or finding a better position for the dominating trend, the dominating energy on larger time frames too, right? Like dominating time frames, like again, if I'm looking at something that says consider a long on the 5-minute, but the 24-minute, the 1 hour, the 2 hour, the 4 hour, the 6 hour, the 12 hour, the 1 day, etc., are all bearish in a bearish trend, chances are consider a long in the 5-minute is probably a better opportunity to find a better position or a better entry on a short. I know that sounds counterintuitive, but again, depending on the time frame, you have to be smart about what decisions you make when it comes to triggers. And they're, I think, much more powerful on larger time frames. Again, especially for those people who are trading with some leverage behind them. So again, take more than just that into account. Breakout detector is really cool when it's pending. When it has a pending signal, it's generally because we have some confluence across these items. Money flow is actually a really nice metric. It gives you some good information and insights on what it says, money flow, right? So if all of that is lining up a certain way, in this case bearish, that's one of the more sensitive metrics on there. I used to say, when this was the only algo we had, I used to say that generally my favorite thing to look at is this row and this row. And when I have uniformity across this row and the money flow row, right, all of this here, that is where I will start to kind of, look to take advantage of that move. And then when I have breakout detection pending and it's supporting that thesis for that direction, then I really, feel even more confident. That was before we even had expansion detection, trend scanner, movement monitor, and so forth, right? And breakout bars. Breakout bars are a derivative of this box. So I just want everybody to know, when breakout bars turn yellow or orange, in the case of bullish pressure, it's because this is either above 75% or it's above 85%. When breakout bars turn cyan first and then deep blue, it's because in the case of shorts, this is above 85% or above 75%, right? Turns cyan at 75%. It turns deep blue when it's 85% or more. Now, this can be as high as 100, and unfortunately, you wouldn't know it just by looking at breakout bars. So they're there to help, and the goal was to declutter an 8 chart layout from having to try to have these everywhere or even have these labels everywhere. Labels could still be useful, but breakout bars have been, I think, relatively useful in just letting us know when Confluence is present. And then if somebody really wants to get granular, they can see just how strong it is or isn't, right? Because this could be as low as 85 or it could be as high as 100 plus. And you can also look and see which boxes happen to be red, which ones happen to be yellow or orange, implying transition or just call outs to look at the box. Maybe they don't have a ton of Confluence, which ones are green, which ones are red, etc. So that's a little bit of a refresher course on the Confluence monitor. And then the last thing is the backtest itself. So now that you know what these things mean, and you have kind of like the full system understood in a way that you can kind of see this backtest play out, and you can watch what's happening on the Confluence monitor, on the label, with the breakout bars. You can watch what's happening with the movement monitor when it turns blue. You can see when these expansion dots begin to show up. You can see when the trend scanner apparently starts to show up and starts to become apparent, I was trying to say. Now you can, I think, have a better understanding of this backtest, and we can still do it in a pretty concise video. So here we go. With all those things in mind, let's kind of go through it relatively slowly so we can take it in. Okay, sometimes it takes a minute for the box to shift, but this is what you would experience in real time, right? So 87%, got some volatility, comes up and shows up in the Confluence monitor. We're back to 78%. We had a red dot show up because of what this move expanded to, but I want to point out that it did not close with that red dot printed, right? So sometimes some of these things can show up. Even the blue movement monitor could show up, and depending on how the candle closes, it may not close that way. And I've always kind of told people that how it closes is technically going to be more important in almost all cases than something that's flashing but does not close that way. However, flashing in a lot of in a lot of cases can be a sign that that move or that directional move is coming. So kind of keep that in mind. A lot of times, we'll see flashing happen a candle or two before it actually happens. So we had a little bit of a flash. You can rewind this if you need to, but we had a little bit of a flash of probably a different color breakout bar. I bet it was deep blue. And then I definitely saw the red dot show up again in that moment of down pressure when the candle was down here, right? When it wicked down there. So kind of keep that in mind. Let's keep going. There it is, right? So now that's kind of what it looks like. Now we're at 95%. You can see you're really starting to see a lot of the data show up in the chart itself. The zone, it's in the trending zone, which in this case is bearish for anybody who doesn't understand that. And the direction is increasing. So it's increasing in the bearish direction, right? And you can look at, if you get confused on that, you can actually look at it under trend, confluence, and trend and power. What I wanted to do is have two different measurements of trend so we can kind of be sure that they're both picking up bearish energy, right? And we're in a transition zone of sorts, right? So it hasn't fully integrated into, the energies on either, but it will. Notice pending bearish breakout is now detected. We're bearish transitional zone in the trend sniper, which I mentioned is one of my favorite ones. Active money flow is now full bearish. We're crossing bear. This top line is almost all red. We are missing a signal here, but it's almost all red. And you look at short-term and real-time price action, all appearing to be red. Again, this is, even for the 5-minute, this change of trend and even this transition zone would be somewhat longer term metrics that are likely to have longevity. So keep that in mind too, just for what it's worth, just extra notables, right? So notice that we have a blue movement monitor showing up for the first time. So somebody actually could, if they wanted to, I'm gonna just share that, right? Like, what would that look like? Because let's be honest, some people like to do things kind of on the early side. So I usually look at that sort of thing as a what I call a trigger. And the reason I call it a trigger is because it lets me know that the move that I'm considering doing, now maybe I should consider it even more. I would probably look at the next pressure line down, because I usually do, for what's my largest expectation of expansion. And so my largest expectation here would be, do we have enough pressure on this asset to go down to the blue? Now, I happen to know, and I shared some notes, that we actually had blue breakout bars on the 1-day, 2-day, and 3-day for Bitcoin. So in this case, yes, we had some evidence that a nice break to the downside was possible, even if not probable, highly possible, and potentially even we could use the word probable, right? Like, we had that kind of data. So now we did have the blue, but obviously this could be a move somebody goes into. I'll point out what it looks like to go all the way to the volatility cloud, right? You can kind of see it. That's where the volatility cloud is. I'm not sure if you can see it right there. It's literally at 60, 224. So a person could do this. They'd still have really nice asymmetry. It'd be a safer play. They could do this with lower leverage. You could 10x this and still only lose 4%, right? Plus slippage, maybe plus fees. But mathematically, you would be at about a 0.41% times 10 loss, and you would be seeking a 4.58 times 10, about 46% gain. So that's where we're at here. This would be kind of like first attempt for a short, right? I'm going to zoom out a little bit. I'm going to make it kind of like our first attempt at a short. Let's just see how it does. And then we'll look at a more certain attempt at a short. All right, so this is this one. Now we have a second one. I do want to point out, I guess while we're here, that we've had two closings at 92 and 95% bearish. We still have the trend sniper with not a confirmed signal. So this would be kind of like early entry based on, again, the 5-minute. But a lot of things about this look really good. We still don't have that full top line signal, so keep that in mind. But I think it's fair to say that where we plotted our first short is actually like a very precision short, but it didn't even have to be that extreme. A person could go, just a bit above this 21 EMA and still be in good shape, right? But we went all the way up here. If we went down here because we want a higher leverage trade, I just want to point out that somebody could do that too. They may get stopped out. We'll see what happens on both, right? So kind of keep in mind that you could do one or both of those trades. You could do them on different exchanges, and you could do whichever leverage preference is suitable for you. Just follow list 2 and list 3 so you can make smart decisions for yourself based on your goals and your risk profile. But with that in mind, now this would be another moment in time where the alert would literally, even if you were not watching what was happening, the alert would ping you for a second time that we have blue breakout bar, we have blue movement monitor, first time, we have a red dot showing potential for expansion. So keep in mind, this is where you would get the ping. The one, 10 minutes ago is where you would get the ping. You wouldn't have to sit and watch this. And again, this is pretty sensitive to the 5-minute. So now a person could easily set their short there. However, I'm going to set another, I'm going to kind of like show another opportunity. Kind of like to go roughly to the movement monitor. So we would just kind of see if we could catch that, or if that was the opportunity, right? And of course, somebody could easily momentum short this, but I would say the further you are from the movement monitor, the less leverage you want to use. The more overextended you are in whatever you're doing, the less leverage you want to use, right? And you always want to have a suitable stop loss zone as well. So give or take, something like this would kind of be like your next textbook place where we would kind of look for some type of short. And I guess I'll put them right next to each other just in case. Okay, so 97% bearish. Let's take a look real quick at what's going on here. Now we have pending bearish in the macro trend, right? So we're at 97% short. We almost have full confluence on the top side. Bearish zone, currently bearish zone, strong bearish, even in the energy. Active money flow, full bearish. In fact, there's not much that's bullish here. The only thing that's bullish is the fact that the trend is so bearish. And then we do have, longer term data, very, very, very long term data that just lets us know that we're technically above one of the very, very long term EMAs for the 5-minute, which, we probably would not want to use that data for a short term move that we're working with, right? And again, talks us through volume momentum. It talks us through momentum confluence scanner, acute momentum. I've kind of like plugged in everything that I could to make sure that we have a really solid understanding of the energies and the momentums and the trends and the biases that we should have going into this, to include volume and money flow, which is very rare. And now we have probability of breakout, which is super powerful, right? Pending bearish, breakout detected. So I want to kind of point out that somebody also could, these are just different ways that a person could use this data. So now this person, the FOMO person, right? Maybe it's not a bad thing, but low leverage, right? So this person could be, this is the person that wins a lot, I bet. This person says, I just want, something like a 7 risk reward ratio. I'm gonna go ahead and kind of like enter in at price action right around there. So as long as I get a tiny retrace, I'm in, and then I'm gonna take my move and I'm gonna do something like because I only want to lose 0.56 times, let's say 6. I'm gonna do something like 6x leverage. So I only lose, what is that, like maybe 3.5% of my capital if I'm wrong. All this stuff says I'm right, so I'm going to do it. I'm going to risk I'm going to risk like 3-4% of my capital with slippage. Okay, so now, again, these are not really in real time where the trade would enter. Just kind of consider, and I'll remove this label here in a minute so you can see everything. Right now I think it's important we see the label, excuse me, but I want to have a moment where I remove the label too, so you guys can see what this would look like for each of these trades, right? If they were fully independent ideas, risk profiles, users, traders, and a person could use any one of these with this data. Okay, so this one brought us down. So I think any of these trades is still kind of, suitable. I think even trade 3 did not get entered, right? In this little demo. Now, as you can see, trade 3 got entered, right? So the person that was doing a 6x leverage trade did get entered on that wick. So Mr. Safe or Mrs. Safe, who's doing only a 6x leverage, they're not greedy, they win probably they're more than their share, even though their gains are, a bit more conservative, did successfully enter their short. Okay, we'll keep going. We see a little bit of change because of that green bar show up. However, if we look at Trend Sniper, if we look at Trend Sniper, we're still pending bearish. If we look at actual trends, the dominating pressures are still bearish. So there's a lot of things that are still bearish, right? Overall signal on acute momentum is bearish. Overall Confluence, pending close, strong bearish. Here's one that kind of weakened, right? Previous close was strong bearish. It's not saying it's bullish yet. It's just saying, hold up, the energy did get a little bullish. And then we see active money flow had some change too. We see same thing, right? Previous close, breakout detected, not this one, right? So this candle, it's evaluating, it did not pick that up. So kind of keep that in mind. And then we see a little bit of a change in energy. So the overall signals hadn't really changed just yet. But we see a bit of a change in energy, again, relative to this time frame because of the green bar. It's okay because we kind of needed that to enter our position. I want to draw everyone's attention to the fact that we do want to always keep in mind what color the movement monitor is, and keep in mind that this is exactly why we have stop losses, right? So keep that in mind, and then we'll continue to let this play out. Okay, now I do want people to notice that the red box showed up, right? Let's refresh our memory on what the red box means. It means that you have 5 consecutive bars that in this case had no orange and no yellow. So none of them closed with more than 75% bullish confluence, right? They were all, even that green one, was not strong enough to constitute yellow or orange. I want you to know that you can actually go into Movement Monitor and you can go to the bottom here. You can take off that box if you need to see the candle, right? So we can see that trade 3 was entered successfully. We can also see that trade 2 was not yet entered successfully, right? So these are a couple different things that, like, reasons you might choose to check the box down here. This box is box or not. Same thing with input. If you want to make it more sensitive, you can remove this long-term movement confluence lag. If you want to have the red dots show up, you would check this. If you want them gone, you uncheck it. And then if you want your alerts to have expansion detected included as a prerequisite, you check this box. If you want to have your alerts with look-back detection bars at the rate of a look-back period of 5 included, then you would check this box, right? So whatever you have here is what it's going to check. If you are requiring it to have all of these different criteria plus a 20-bar look-back period, it's not going to ping a lot. In fact, it may never ping, or it may ping, way later than you want, right? So you want to kind of consider that, and that's if you want it to ping with expansion, with the look-back detection bars in general. Some people may not, because maybe they feel like it's too late. I think on major moves, 5 bars is usually not bad, and it probably creates a situation where you have a higher probability of catching a true trend versus a fake out. And that is actually why I added the look back detection bars, aka the trend scanner aspect, because I want to be able to identify things that have more of a potential to turn into a move with longevity and less of the fake outs. Now, they don't predict the future. All they do is show you when you have 5 bars with no opposing pressure. That's all they do. But it's cool to get alerts that show us when that opportunity shows up. So keep that in mind. So I wanted to share that with you, that's a bit of what that does, right? So I like where the label moved. It's not right in our way anymore, so that's kind of nice. Let's take a look at what else happens here. Okay, so we may need to look at that again, right? Because it's tough to tell with the box on what's going on. So in this case, this is a great example, right? Trade 3 got into the trade. Trade 2 was a little too aggressive because they were a little greedy maybe, and they were seeking a 50x move with perfect precision, and so they didn't get in on the move. Where if they'd have just been a little bit lower, right, seeking 19.64 risk-reward ratio, willing to risk 0.23, maybe at a 20x leverage, which is about 5%, then they would have gotten in the move, right? So we'll use that just because it makes it easy, and it's still a great case study. And their stop loss is right here at the white line, right? Which I think coincides pretty closely. Oh no, it's a little under the volatility cloud. So that person, because they were doing 20x leverage, required a slightly tighter stop. They needed logic for a slightly tighter stop, so they decided to use the white line instead. That's fine. Let's just use that as another case study. And you kind of see still how that person with an almost 20 risk-reward ratio would do pretty well. All right, and then we get another, it looks like another potential batch of the breakout, the expansion detection dots showing up. And so this is where we really kind of start to see it shine. So again, notice that the macro trend on the trend sniper over here, still pending bearish. Now we're back to money flow being full. Here, we're still in the bear zone. Again, this is the 5-minute. If you're using this data, you would be able to see things, as they are in the 12-minute, the 24-minute, and so forth. You'd even be able to look at the 3-minute and really be able to have a grasp on all of this data, measuring each of the time frames that are relevant to you, right? So this box is specifically measuring the 5-minute time frame. So having this box measure multiple time frames gives you even a bit more certainty. But right now, this demo is mostly to show the power of these expansion dots as well as the blue movement monitor when you add in the time efficiency of alerts, right? So here's another opportunity to just kind of look and say, okay, what if I made it to my computer here and I look at it and I go, you know what, it hasn't really been a major move yet. I like that the 5 is doing what it's doing. So now I'm going to get rid of this box. I'm just going to get rid of this labels, because I'm sure we don't need it so much anymore. You kind of get the picture. So now let's just say this person wants to get in. They could either get in at current price action. We got a couple options. Current price action to the volatility cloud with a 6 risk-reward ratio, which is definitely not bad. This is a non-greedy, perfect for low leverage 4x trading opportunity, right? Because even 5x, right? Because this would turn into, on a 10x, a 6.6% loss. So it stands to reason that half of that would be a 3.3% loss. Let's just say 4. So this person is willing to risk 4% true numbers so that they can make 20%, right? So give or take, right? That's the math. They're willing to risk about 3.5% so they can make 4 times 5, which is 20%. And that's a person that just says, you know what? I'm not fooling around. I'm FOMOing in. I'm market ordering in because I want to be a part of it, right? even this person can play with a reasonable degree of responsibility with their decision to enter as well as their decision to have a stop loss. And then I'm going to do another one that's a little tighter. It's going to be over here, but pretend it's happening right now. This one is going to be a guy that wants a little more leverage, and he wants to enter at the movement monitor, and he wants to use the either the 21 EMA there, the white line, or maybe as much as the volatility cloud for his stop loss, right? But let's just use the white line. Let's just say this person is 20x leverage. If their trade hits, it may not, but we will evaluate both. So again, this one's a market order in with relatively low leverage, and this one is an example of higher leverage with a limit order being placed at a point where price action has to go back up to fill it. So he may not get filled, right? So we'll see what happens. There you go. So a great example of this person. Let me see, how can I do this? Let's use an emoji. This person, because they were a bit greedy, let's be honest, this person did not get filled. They wanted too much, they needed too much precision, and so this order in and of itself did not get filled. And I know the move, right? We've seen the move. We know it didn't come back up. So a great example of how this high leverage person seeking the 20x didn't get filled. This smaller order that went in right away, market order, because conditions were conducive, who did a 5x did get filled. And they didn't have the greatest asymmetry in the world, but it was still one risk-reward ratio above Paul Tudor Jones, which is always looking for a 5, right? So we had 6. So you could fail 5 times, and if this move was fully successful on the 6th time, you'd still be profitable. It's kind of like the point of his risk-reward ratio discussions. So now we have a multitude of different potential trades that a person could be in or take. And we can kind of see, just how powerful the move was, right? So you see those, I went through it, rather abruptly, and I'm still going, but you can see how these circles continue to show up, right? These red dots continue to print. This blue movement monitor stays blue. This volatility cloud is kind of steepening, indicating, the move is a pretty aggressive one. So that's some of what you see, while it's happening. Now, we generally front run, which is why I have these trades here. We generally front run a lot of people, especially if you're sleeping. We will front run, take profit zones, right? So we'd probably be somewhere in that range. But let's continue and see where it takes us. So it kind of continues to take us down. This would probably be, the final move for some people. I'd say, like, a lot of times right at the blue is great. If you catch a move from there to like right at the blue on any of these, it's great. If you look at where these were, this initial entry was as much as a 28 risk reward ratio, risking as little as 0.16 or 0.12. Even on a market order, this wouldn't have been bad, and you could have set your stop loss just above the white or just above the red. Or if you wanted to have a lower leverage position, you could have even set your stop loss above these longer term ribbons, right, for an even less greedy person. And this move even still would have yielded on let's just say a 5x, this move would have yielded 20%, right? If we go back to the case study of having over 20, closer to 30x leverage, well then this person, could have probably done something like a 40x and probably still been all right. 1.7 is what you stand to lose on a 10x. 2.4, or I'm sorry, is that right? 1.7, 3.4 is what you stand to lose on a 20x. So 6.8 is what that person maybe stands to lose on a 50x, right? So we're just kind of like taking these numbers, magnifying them, acknowledging that fees and slippage will also come into play. So what if that person just said, hey, I'm at peace with losing, 10 or even 15%, because a 40x would be really awesome, right? Because on a 40x, the 4.62 right here goes to not just 40 point, like 41, let's say, but it goes to about 160%. So you've almost 3x'd your capital on a 40. So now you know why people try to, take advantage of the 40x moves. But watch out for over optimism, because in most cases, people are overly optimistic and they need too much precision, and they jump in to moves that are not this beautiful. Like this happened to be a beautiful move. It would have looked beautiful on all time frames. This is a ping with a blue movement monitor, expansion detection. You'd have Confluence monitors kind of showing, what to expect. You're below long-term moving averages. I mean, you have so many things working in your favor. You have multi-day time frames with blue breakout bars. You know that you just breached a support. You're on your way to the next one, so you know your take profit. You can measure your asymmetry with different goal outcomes, different risk profiles, different asymmetries, different stop loss zones, right, for different kinds of trades with different kinds of leverage. So you have a lot of opportunity, and that's why I wanted to build this video. And that was the move, right? Like from there we bounced, and I could, we kind of at this point, for anybody who's paying attention, knows the market. But these were the different trades and different trader personas, right? This person, 30x leverage, easy. This person right here, at 18.67, willing to risk 0.23%, easily a 20x, right? So this person could have easily made 80%, and the whole time they were risking less than 5% because of this data, right? So this person, this is a different risk reward ratio, right? So this person could have easily done something like a 5x to an 8x, right? So a 5x, they would have made somewhere in the neighborhood of 20% ROI. On an 8x, a bit more, right? 8 times about 4. So they'd be looking at like a 32% gain. Now, the whole time, they'd be looking at losing 0.56% times maybe 5, right? So a little over 2.5%, or maybe as much as 8. So still keeping their risk really, really well in check. And if you look at the actual price, that occurred, it wasn't really anywhere near their stop loss zone. But they have to be at peace with losing, that 0.52% times 8 in that particular situation, right? So they have to be at peace with losing maybe 5% plus whatever comes up with regard to slippage and whatever comes up in fees. But I've noticed that the more leverage you have, the more affected by slippage and fees that you are. The less leverage, generally speaking, it seems like fees and slippage hit you a lot less. So just something to consider there. Trade number 4, again, just a different example of how to use the data. This person was, I forget which one this was, but I can tell you just by the numbers, this person would have been a lower leverage trader, right? This is more like a 5x, 4x leverage trader who wants to cap his downside at 0.65% times 5, right? So maybe 3.5%, 4% organically, and then they have to be at peace with whatever slippage comes into play, whatever fees come into play. That's it, right? They could easily be way down here by the volatility cloud, but conditions were extremely conducive. Again, we were below long-term moving averages, long-term simple moving averages. We were below short-term ones. We were in the red volatility cloud. We had expansion detectors pinging. We had breakout detection pinging. We had, so much going for us, right? We had the trend sniper pending bearish. We had blue breakout bars, blue movement monitor. All these things working as a symphony of Confluence that's visually appealing to the eye, instead of having to look at the 7 different indicators underneath your chart, so you can make sure that, is my stochastic doing what it should be? Okay, that looks nice. Is my RSI doing what it should be? And let me line them up and see what candle it's on. And is my MACD doing what it should be? And just all these things most people don't understand the MACD, right? So we have a lot of different metrics that measure all those things for you and then some. All of the things that they're intended to bring to the table and then some. And then all it does is change the colors of the bars, change the colors within this coded table, right? Whether it's significantly red, whether it's mixed, or whether it's significantly green, tells you when a breakout is likely. Now we have expansion detection, which kind of works with the breakout detector, right? These are two different things. This is conditions conducive to expansion, and this is likelihood of a breakout. Like, those are two different things, but they seem similar, and they both work amazingly well. So these are just some cool features. On this particular trade, I put the red dot there because it didn't work out. My goal was to show people how to work the system, how to increase win rate. I want to show you the dangers of using leverage, right? Like, you may not get into a trade because you need the price action to perform a certain way. It's much easier to get stopped out because you need so much asymmetry and such a tight stop loss, because you stand to lose so much when it goes against you, that you get stopped out more and you don't get to enter trades more. So the people who are on average less greedy do get to enter trades more. So I'm not here to stop people from doing high leverage if it works for them. I just want to share with the average person that might watch this that super high leverage makes it harder to get into trades, much easier to get stopped out and lose. If you don't have a stop loss, makes it much easier to get liquidated, and so forth and so on. So you have to do that responsibly and make sure you play by the dojo belt level system, right? When you're a black belt, you can do black belt things. If you're a yellow belt, you shouldn't try to do, black belt things. And I hope that this overall gave you a nice glimpse of different trade personas and how valuable it is to know when this line simply turns blue, and what it means when it's blue with expansion detected, and how to incorporate the Confluence monitor data, and what a lot of this Confluence monitor data actually means. How to incorporate the volatility cloud. We didn't really talk about settings on this, but there are numerous settings. I happen to be using the scalping setting because we are on the 5-minute time frame. How to incorporate our long-term moving average ribbon, how to make sense of what to use the dynamic pressure lines for, right? This is great. This could be used as a stop loss. This could be used as a lost level. This could be used as a take profit. At some point, maybe later today, this could be used as, potential for when do we start to see a shift in momentum, right? So let's fast forward to real time. Kind of see what this looks like in real time. None of this is too relevant because it started to chop, but it'll give us an idea of what it looks like in real time. And so here we are in real time. And so as you can see, the white is for now performing. And so I think I just mentioned in Discord, what we're going to do now is see if up pressure does come into play that could possibly create a move that would take us up back in the direction of our next resistance, to retest it, right? Does it even maybe take us back to the green? We really don't know. Or there is a pressure line down here somewhere. I'm not going to give it away. I think it's right around 52 or 49 or something, somewhere in there. But there's a pressure line down there. This happens to be the 2-week time frame. And, the next major move, if one took us down, would be when we feel that we start seeing a lot of the same things. We start seeing the 5-minute turn blue with expansion detection in a red volatility cloud. We start seeing certain time frames show bearishness that might lead us to believe that we might have a move that not only takes us below this white line, but starts to increase probability of a breakout to the downside once we are below, right? So right now it's serving its purpose, but the value of being able to monitor these metrics and have, all these KPIs show up in one snapshot, monitored and evaluated and like put together in real time, is knowing what to do and when to do it when we get down here, not for certainty, but for a massively increased statistical probability of catching the next short, or finding that maybe, conditions are not conducive to that short, right? You're watching it happen in real time, which I think is really cool. And you can kind of see, what it looks like. Pending bearish breakouts detected. If we start to see in real time a red expansion dot show up, that's pretty interesting, pretty powerful. And that would be a time to go and do everything that we just talked about. So mostly I wanted to share this as an educational component. I think we'll have this broken down and shared, but you can see it all flipping in real time. This actually happens to be the real-time price action of what's going on right now as we speak for the 5-minute. So as you can see, like, it's lining up really well. If we were to go in on a short, we might want to wait a little bit longer, and then we'd want to wait for conditions conducive to a expansion, right? To some degree of expansion, which a lot of times does normally require consolidation in this area. So the 5-minute could stay right here hovering around this white line for some length of time. The market does tend to seduce people into shorting at the wrong time, right? So somebody goes, oh, it broke this line, I'm going to 50x short right here, or even here. And then that's when the market brings it back, liquidates that person, or stops them out, whatever. And it usually gets the same people over and over. The eternal optimist, the eternal pessimist. A lot of times gamblers, they will always think that they're gonna, catch the move. And sometimes they do, but it's a game of statistics, so they have to be really careful. And like I said, we might get to see an expansion dot show up in real time, which would be really cool. But I won't run this video too much longer. I may time lapse the rest just to see what happens, remove myself from the video, and in fact, if it happens now, it'll be kind of neat. We get to see it play out. But again, this is real time. I think this is the first time since last night, hours ago, that we've breached the white line. And so, a lot of people are looking at, do I need to short right now? If I look at, where we were at and where we've been, this is the kind of thing we do in the group, then I would say, it's gone as far as that line right there and returned, right? We've already seen a 5-minute candle do that before. So that would kind of be a real moment of deviation there. But, and you can see we had a red dot show up at that moment. But as it says in DIIO checklist, I believe part 2, be careful entering at a pressure line, right? Because this 5-minute looks like it's clearly broken it. But if we look at something more significant, we can say this hour could easily retrace back up, right? And this gives you a little glimpse of what the Confluence monitor looks like on the hour, right? So the hour itself is actually pretty bearish in all the different places that I kind of mentioned, right? Up here, current bear zone, here, pending bearish, macro trend, and then also active money flow. So again, when we're in this kind of situation, you just have to watch out for that moment of market seduction where it is pulling in FOMO people who believe they're about to miss the short of a lifetime, and it generally will drop somewhere, and then it will take a lot of their money. These are the kind of people that ride a 40x trade to, $1,000 or whatever money means to you, right? They'll ride it to some nice number, and then they'll watch it all go right back. Or they set a stop loss or a trailing stop loss, and they get stopped out and ultimately lose money. So we want to just kind of like have patience and realize that the next major move to whatever the next target is one that will probably give you much more time to take part in it than you realize. And at the same time, it does come with the need for execution. Some people just habitually watch the market and take part in discussions and do all kinds of things, but they don't ever actually execute at meaningful moments, and so their wealth or income, never changes. They just like to be a part of, watching it. And I think that that's, a reality in 2024. So we want to watch for deviation of any kind. And generally speaking, we're looking for those dots to show up. As you can see in the larger time frames, you sometimes have to shift the screen to kind of make sure that they're showing up. Especially if you say, hey, shouldn't they have shown up here? You just want to make sure that you zoom in enough or zoom out enough to see where they would have shown up. So we're still in a period of expansion potential in the 1 hour time frame, which means this could go down here. But again, usually when we reach a period of consolidation, or when we reach certain lines, it is because we have a situation where we've reached some powerful, in this case, supports, and we will probably in most cases consolidate here at least for a little bit, even if the move does go down. It's oftentimes not likely that we have an extreme move and then we have another extreme move. Obviously in crypto it has happened before, but it's not always likely, right? And so here's kind of another way to look at it, as you can see how overextended you are or are not on Bollinger Bands. And so, that's kind of just another metric to look at. Here, in real time, we were overextended beyond, right? It's green because it's kind of saying you almost should be looking for a long, but we can't really guarantee it. And up here, it's red because you almost should be looking for a short, but we can't guarantee where. We're just saying you're kind of like in that short zone as far as maybe it's overextended, especially as we get toward touching these lines. And so, right now, we kind of have to watch out for that seduction of down pressure that might try to drag you in, only to stop you out, take your money, or liquidate you with, a false breakdown. And so you want to kind of like just pay attention to the details. But otherwise, I think this is kind of a good way to look at it. Like where are we in this time frame as far as potential overextension from the movement monitor, and then where are we in this time frame? 4 hours often a good one, as far as overextension in the 4 hour from what's normal, which is up here at 59.3, and which could be as high as somewhere in this range, right? So if anything, maybe I want to look for the next batch of up pressure if I am some type of short-term trader. If I'm looking for big picture move, I'd have to ask myself, like as an investor or a swing trader, what's going to happen this month? Okay, do I think that Bitcoin's going to go down to 49 or whatever the case is? And then is it worth it to be a part of that, to get out of my Bitcoin or to short it or whatever the case may be, based on the asymmetry? A lot of people don't do things around asymmetry, but I think once you find how to use it, and once you have statistical probability that helps you with it, I think it helps a lot. So this has been a long video. I believe that we'll probably have the ability to break it up into smaller videos, into segments, and to be able to share it. And so I wanted a bit of a refresher on some of the important parts of the Confluence monitor, breakout bars, how they come about, what pressure lines are, what they can be used for, how to identify lost levels, how to identify maybe target take profit zones, in this case of a short, why Bollinger Bands can actually be useful for, potentially looking for overextension, a lot of those things. And you can backtest any of these items to kind of see how they've reacted in the past, so that can help you prepare for how to utilize the data in the future. So that backtesting is important, and that's what this replay function is, right? If I want to backtest, I click replay, and then I can figure it out from there. So other than that, I hope you've enjoyed this video. I hope it's been a good demo for the Movement Monitor 2.0, what the expansion dots are used for, and all the rest. So thank you guys for watching, and have a great day.